Okay, so now I'll go through my portfolio, the usual weekly portfolio wrap. Before I do, I will do the usual recap of the dollar, the DXY, the gold, silver, and the miners very quickly, hopefully. So let's start off with the DXY. Strong close on Friday. Already on Thursday, we closed above this descending. And then Friday, I think it was pretty significant, closed above this little horizontal short-term resistance. For me, it indicates it wants to move higher. Obviously, nothing is guaranteed, and hopefully it does move down. But I do think it's possible that we start to test this 103.5, at which point we should run into resistance. And to be honest, there's strong resistance just above, very strong resistance. There's some pretty long-term descending trend lines. So we should fail. And if we pop our head above, I don't think we'll last very long. So I do expect some decent resistance if we even get to 103.5. Now, when you look at the currencies, which I did in my last video, it looks like the dollar can make that kind of a move against the Japanese yen, the euro. No problem why that can't keep going lower. The pound against the dollar. So the dollar can move higher, but if it does, it should encounter resistance. I hope it does, because the metals should suffer if it moves up. Now, with that being said, you zoom out, it's true that, lower lows, especially after this breach here of 101 or 100.8, lower highs, but look, we have the potential to make a decent move up, at which point we will equal the last high. So, it won't be a question of lower highs, it'll be a question of equal highs at that point. But let's see, so far we're still at lower highs, lower lows. And when you zoom out, you look at the BRICS, you look at the de-dollarization, you look at the debt, etc., inflation, interest rates. Yeah, we should move lower. And to be honest, gold shouldn't be going higher. And sometimes gold moves up with the dollar. So even if the dollar moves up, it's not guaranteed that gold remains muted or goes lower. So that's the dollar. Don't neglect the impact of the dollar. Let's look immediately at gold. I'm not going to look at the markets or interest rates. Interest rates are very important. Very quickly, interest rates look like they're going to go higher. But again, a bit like the dollar, interest rates can go up with gold and silver. So since this is about my portfolio, let's look at the more immediate sector. So let's look at gold. Gold remains muted. Look at this descending. It's not going to break out of that, in my opinion, unless the dollar breaks down. But look, what happens if the market goes down? We've seen gold do very well when the market breaks down. I mean, remember this move from down here during the banking crisis earlier on this year, or just before, 2022. That was because of the banking crisis, because of interest rates going up. And to be honest, interest rates are pretty much where, or they're about to be where they were when the banks started to crack. So this entire move could reoccur, to be honest. So, and what happens if the banks go down? Does gold and silver and Bitcoin, for example, all of a sudden move up, regardless of interest rates? Because people buy bonds in fear, so interest rates go down all of a sudden. What about the dollar? Last time dollar went down. But the dollar could easily go up in such a safe haven period, and gold goes up with it. So it's just to say, sometimes the dollar and interest rates don't matter, and gold will just start to scream up because the markets are crashing. So you have to recognize that we're in that potential scenario very soon. And to me, the banking crisis has not disappeared. So this would be a great launch pad right now. Double bottom, break out of this, move back up to the 1980 zone, and as soon as we close above 1980, boom, we go straight through 2000 and start running for 2050, and then the rest is history. 2100, that becomes the floor, and then it's on to 2400, 3000, all the other numbers you hear in other podcasts. But for now, gold is subdued just above 1900. It could go down to 1900, of course. That's a clearer support zone. And if the DXY, like I just showed you, does move a little higher, maybe that's what happens. And maybe that's the last shake of the leaf that we need. Silver, likewise, it's found a little support around here, just like gold around 1913. And we could start to move up from here, and we'll cover the resistance points on the way. I suppose the immediate one is around here, just above 2350. But it's not that clear at the moment, and it doesn't really matter. Is it a sustained move up? If it is, then resistance is basically 25. But on the downside, if we do flush, then 22. 20 should be very strong support. Obviously, it's the absolute low from down here, the horizontal, but also look at this ascending. You know, that should be very strong longer term support. So 22 should be very strong. I expect dip buying, and it could be another shake of the leaf, stop loss hunting, shake out, fake down, whatever you want to call it, but massive reversal from there. So gold 1900, silver 22 look good. Let's look at the miners. They already look good. They've already bottomed. Obviously, if gold and silver go down, then these are not allowed to be green, so they'll probably go down, but they might even just, I can imagine gold and silver, if imagine gold goes to 1900, the miners will probably just be back down where they were a couple of days ago. You know, worst case scenario down here. And if they do go low, then you've got strong support here, you've got a little gap to fill, and then back up we go. So I don't think you can expect too much downside. Obviously, we have this absolute support down here just in case there's some ferocious move. But to me, the miners have indicated that they are a buy down here. And if we do see gold at 1900, silver at 22, you could have the GDX, 2850, or, still around 29. GDXJ, same sort of thing. Look at this. Look at this close near high of day. Better close than all here. Look at these. The lows of the day were higher than before. Basically, the last 5, 6, 7 trading days are decent. Maybe 6, not including this one, obviously, but 1, 2, 3, 4, 5, 6, yeah, 7. So the miners are outperforming the metals, and for that reason, because 1922 on silver, you could just get some decent buying if they even go down here. So GDXJ, the low of 34, I'd say between 34 and 35 is just a buy. So miners are good, outperforming. Now let's go to the portfolio because I'm going to go through the miners. Let's look at Newmont, which has not been the best one, but it's a senior, it's a beast, it has a good dividend. It's on a support trend line. I think it's pretty obvious. Look down here. 1, 2, 3, 4, if you want to call it. Then here, 5, very important. This time didn't get to it, and this time 6. Dragon on the bottom. Now Newmont has not had the best recent results, costs have gone up and all this stuff, but I don't care too much about balance sheet stuff. It's a serious senior, it has a good dividend, it's well known, and it will bounce if the miners bounce. What I want to do is I want to trade the GDX, but I want to own individual miners that will trade with the GDX, but will outperform the G. Otherwise, why not just buy the GDX, even though I'm unable to do that as a European citizen. But still, even if I was an American, I'd probably be doing what I'm doing here because I think I can squeeze a little bit more profit and lose a little less by owning individual miners rather than the outright ETF. So with all that said, if the miners bounce, I see big up, well, big, a move to 43. At the moment, support is where we are, so just under 40. If we do have that move down, then to be honest, Newmont is underperforming a little bit, so it could actually go to new lows, but I expect a nice dip buy and then a close back above the low of, let's say, 39.70, maybe even 40. So I expect decent dip buying. It's already very cheap. Zoom out, compare this to a bunch of others. As one of the top tier seniors, it's a good buy. But obviously, if we do go lower, there's only one real support. Maybe you've got this one here, 39. Nice round number also here. Little support and resistance on this day. Maybe that day too. But otherwise, this absolute, 37.50. So I think I would be buying on the way down. There are other stocks that are probably more beaten down, but Newmont, I like to keep it at a certain value. So I'd probably be buying at 39 and 37.50 on the way down. Little nibbles, just waiting to see what happens next. But you can be pretty reassured holding Newmont. So yeah, where it is now, good support. Otherwise, 39, otherwise 37.50, little nibble points on the way up. If you really want to be tactical, probably 41.99, always just under the round number, 42, otherwise 43, to be honest, just above 43. And look at this descending one here. This will definitely act as a resistance just in case we do get above 43. So which coincides with this one here. So between 43 and 44, I do expect a bit of resistance. Otherwise, to be honest, we'll catch up on another day to review in case we are moving up. But 43 to 44 resistance. And then the supports I just mentioned. Let's look at Barrick Gold. That's doing better than Newmont. Nowhere near as low. These higher low little pivot points here. This ascending, nice. Look at this already off its lows. You'd expect gold to have already reversed after seeing this. So very strong. Look at this beautiful little candle here. Closed at high of day. This thing wants to go to 17.50, which is where resistance is. Normally I would trim and sell, but I'm up for holding the seniors a bit more. I don't really care. Yeah, I mean, 17.50 should be resistance, but I'm looking for you know, if we're moving up, we're probably moving up because we've bottomed temporarily, and therefore I expect Barrick to probably get to 18. You know, look at these resistance points. For me, they're completely correct. 1750 from back here, from there, even back in these days. Here, there's a lot of, you know, sidewaysness about it, but also this candle here. So for me, 1750 should be resistance, maybe daily, otherwise intraday. And if we go higher, obviously this high we haven't taken out in weeks, even months. $18, nice round number. So sell just below the last candle. You see this one here. I'd be selling it 1789 probably, as long as it went above 1789 or whatever, 1787, same thing. And after that, then it's all about gap fill and going all the way back up to 20, at which point you expect something more strategic to have changed. But Barrick looks really good compared to Newmont. So it's good to spread your money out. You know, imagine you've got 5 times the money in Newmont rather than Barrick. Well, you wouldn't be that happy, but it's good to spread it out. And I have pretty much equal weighting, just a little heavy on Newmont still, but Barrick looks good. Actually, I didn't speak about the downside. Barrick, downside, this ascending, so $16. If we go lower, to be honest, we're probably going lower for a reason. So this one is probably to be ignored, but otherwise 1550. And after that, to be honest, it might be this one over here, 1500 or just above. And then we'll see what happens. Then we're trading all the way down here, which is pretty much where Newmont is at the moment, all things considered. So $14, but yeah. Okay, Agnico-Eagle also trading better than Newmont. A little similar to Barrick Gold, maybe even better. It's probably my favorite senior. Closing the high of day, you know, looks also like its sector has reversed, although the underlying metal has not. If there's downside in the old low, 48, just below 48, actually, maybe even this low of this candle could act as support. After that, you can see here, look at these candles, 47, but that's so close to this low that we might be going lower. And then 45, just below 45 should be decent support. And after that, then who knows, maybe 40, but there's probably a reason that we're going down. So we'll revisit that at that time. But for now, it looks okay for a move back up to 50, no more 50, 50, 50, 49 is a decent little sell, little trim. And after that, you're probably encountering this descending, which almost coincides with this little high here of 52.70. So that's the immediate support and resistance. But I like Agnico-Eagle and I'm in it for the longer term. So maybe I do a little nibble here and there tactically, but otherwise I'm looking for a decent move up. And let's zoom out, see where we are. Look at this long-term descending. The first real nibble I'll do is probably on this longer-term descending, if it even counts, because this here sort of ruins it. But yeah, that's the short-term Agnico-Eagle. Love that stock. Wheaton, look at this. You know, this is one of the stocks that I complain about, saying that it doesn't have much upside compared to the others. But I'll tell you what, during this down move, you know, I'll usually say, look at Coeur d'Alene, for example. Look how much it can go up. Yeah, but, you know, that got its face slapped this week, bad earnings. That's not the point. The point is, when things go down, you're happy to hold something that maybe doesn't have too much upside, but, you know, is very defensive on the downside. Look how much this has moved up, even compared to Barrick Gold and Agnico-Eagle. It's had a beautiful rally. It's basically touched, and look at that, it touched it perfectly. I love these horizontal resistance points. Look at this one here, 45, 70. You know, it looks like it's had a big move up, like a short-term cycle high, and it's going to go back down to this ascending. But no, it's following GDX, and GDX, which is following gold, let's be honest, is probably just about hitting its bottom and is about to reverse and start moving up. So Wheaton can go higher. Wheaton can go maybe 47, and who knows, maybe even 48. And again, this is one of the stocks that can't really rally too much, you know, without 16% to get all the way up here. But, you know, all the others have gone down 10% or 20% or whatever, but this one's actually gone up. So very happy to hold Wheaton, you know, serious outperformer. On the downside, let's cover that quickly because it seems pretty invincible. Then the ascending support, wherever that is, depends how fast we come down. If it's straight away, then let's say around 42, just above 42. If we flush that, then I don't know, this one's too close. So maybe let's take this horizontal low of 41, nice round number. If we go below that, then definitely 38.50. You know, that stretches for a long time. And this is a serious stock. So 38.50 will be serious support. And after that, let's see, we're probably in the 1700s on gold, because this is very, very powerful on the moves down. But on the way up, the horizontal lines you see, so Wheaton, very, very strong, very impressive outperformer. And to be honest, next week, if we have any type of reversal, probably going for 47. Pan American Silver, that had very good news recently. Look at that, except the sector had to go down. So it's forced down, fills the gap absolutely perfectly. Well done, anyone who added there. I think I added just before there around here, but I have a very strong amount in Pan American Silver, more than I've ever had, I think. And look at this move, you know, this bounce off the gap fill. Strong high of day there on Thursday, Friday even more. You know, the miners were kind of green or unchanged whilst gold was drifting lower. So beautiful divergence there. And to be honest, if the metals bounce, then up we go, and we should test 17. Test 17. If gold starts to flush 1900 and all that, well, we're probably going to go back down to this gap fill 15. But this is a strong buy the dip candidate because, first of all, it's destroyed. It's a serious stock. It's one of the big boys. It has silver exposure and it's had good earnings. So one of the better ones to buy the dip on. So one of my favorite ones, definitely, and a good outperformer. Okay, Aris Mining, formerly known as Gran Colombia. Very good dividend play. Absolutely slaughtered. Closed at low of day. It's a bit of a weird one. It doesn't always trade perfectly with the ETF. I don't know if there's news on it. I should know, but like I said on many times before, I don't follow the company releases too closely. But this one, the liquidity, the way it trades, it doesn't always trade perfectly in line with the GDX, the GDXJ. Therefore, this could be a serious opportunity, right? After looking at the seniors and they're basically green the last couple of days, this one's just down, down, down. And well, let's cover the support. The support is $2, just above $2. I was going to say the support is 230, but it's flushed that, closed at low of day. So unless the miners bounce immediately on Monday, this may just drift down to $2 or just below, a little fake flush of $2. And after that, I mean, look, we're pretty much at Corona lows. If we flush $2, you can see the next support I've got at 160-ish, just above 160, which is a scary proposition. This is a well-run, as far as I know, well-run company. The reason this chart looks absolutely ridiculous, like a Chinese penny stock, is because it was going for broke, but then, as I understand it, they have cleaned up the balance sheet very well, and now it's one of the best stocks, gold and silver equities in Latin America. So from what I know, it's good. But anyway, doesn't matter about what I know with the news. $2, 160 on the way down. Otherwise, resistance, well, to be honest, former support should be resistance. So let's say 225, 230. But in case it blasts right through, which it should do on any decent reversal, the next resistance, to be honest, it might be 260, just below 260, this little horizontal line here. I'm going to add it in because it might just end up being the case. This one's a bit harder to call because of the way it doesn't trade perfectly with the miners, but I do have faith in this one. So just under 260 to 265, this sort of 10-cent zone. And if it goes higher, the last high, which should become by then, descending resistance. Imagine it takes a couple of trading days, bam, perfectly, 280. So this one will probably take time before it sees $3 unless gold is flashing right through 2000, at which point you can expect a lot of miners to just not care about near-term resistance and just say, okay, we need some catching up to do. So that's Aris Mining, very, very low. I think it's a good buy. Max Silver, one of the ones that I didn't like for weeks and weeks until it had very good earnings, at which point I thought, okay, I'm not going to close my position. I did nibble a little off here at 1250, just below 1250. Came down. I did actually buy a little bit here. I think it was into the gap fill, whatever, pretty much where it is now. I think this one, I like stocks that have had good earnings and come right back down because the sector forced it to, not because there's something wrong with the stock immediately after earnings. So this one was forced down, but it belongs higher. So if the miners rally, this one should go straight back up to 1250. I do see this descending resistance, obviously, but I think it will crack it quite quickly as long as the sector keeps going. And if it cracks 1250, then we're going to go straight to 1350. So, and not even care about 13, by the way. So I think this one can go straight to 1350. We just need a decent amount of reversal. So for me, resistance is this 1250, maybe just below because of the descending. And after we close above the descending, 1350, that's the immediate resistance. Support, last low, 1050. After that, what did I put? Yeah, that makes sense. $9, round number, also support over here. After that, probably just above 7, but we'll see about that because I don't think it belongs there right now. Goldfields, this is a bit like MAG, one that I wanted to liquidate, except unlike MAG, it had very bad earnings. So the opposite. MAG, I now want to buy more. I did actually buy more on the recent drop, but Goldfields didn't buy any on this drop. You can see where I put support. It was last resistance, 1, 2, 3, last support on the drop, and then today, last couple of trading days. No wonder it's settled around $13. It's support, and it's holding. It's holding after pretty bad drop in earnings. It's just my problem with Goldfields is that when you zoom out, unlike the others that have been butchered, this one is pretty high. So the risk reward isn't as good. And I can easily see, imagine gold goes to 1900, Goldfields will be below 13. I guarantee that. It goes down, see 1150, and then maybe a rally if there is a fake flush. But Goldfields is not likely to hold up as well as MAG, Pan America, Agnico, Barrick Gold, Wheaton. So for me, it's the risk reward isn't as good. I still want to liquidate this position. If we have a rally, honestly, if we have a rally in the miners and it doesn't look like we're going to go through 2000 or anything, I'm probably going to liquidate on the next pop. The next resistance probably is just below $14, 1380, let's say. I wouldn't sell there. It's just too close. I would look for a bit more follow through. But to be honest, around 1450, this little line here, I'd probably sell here. I think that's why I've got the blue one. That's where I think realistically we'll run into serious resistance because that's where it opened on the bad earnings. So it's going to be hard to keep going through there and start filling gaps. So for me, Goldfields is a sell around here. If I had to buy it, I'd buy it on this ascending, but I think there are better buys out there. This is just the risk reward isn't as good as others. So that's Goldfields. All right, Fortuna, one that has not gone down as much as its peers. For me, the peers are EXK, First Majestic, Darlene. There are probably other stocks that are more fitting as peers, but these are just the stocks that I've had for several months and I know them well. And they trade very similar and actually the similar price. I mean, look at EXK, they're at the same price. CDE also sometimes trades at the same price, literally numerically. But Fortuna had bad earnings, I believe. And when I compare it to other stocks, other peers, it hasn't come down as much. So, but anyway, look, it had bad earnings, flushed. I did actually nibble. No, I didn't. Sorry, I nibbled at CDE. I didn't nibble at Fortuna because I didn't think it came down enough. But, I see it. Where is it now? It's running into resistance where prior support was. So for me, it kind of is a buy because if the sector rallies, it'll go up. But I think there are other better buys like CDE, even though that had similar, I think it had bad earnings, but look at the rally it had. This one I did buy on the drop, just on general principle. I'll get to that later, sorry. But, Fortuna just had a drop and it's very unlikely that the next day we just rally all the way back. For me, resistance will be where we just came from, actually, even though I haven't got it there. It'll be the, this zone here, because that's where we dropped from the bad earnings. It's also where we were chilling for a few days before the drop. So it's just hard for a stock to rally and go past its earnings unless it's really been butchered. But this one hasn't been butchered like others. So this one is not one that I would buy. That's why I didn't buy it. I might sell into the move if it goes back to this resistance. But again, it depends what the sector's doing. If the dollar's just about starting to roll over and looks like it's going to go much lower, then why sell too much there? It should keep going. But unless you have some, macro assistance, like the dollar rolling over and gold and silver going up, market collapsing, or whatever, you know, bond market being bid because of some fear, banking crisis. Unless you've got something like that going on, I expect Fortuna to run into resistance here. If it does go higher because of such said incidences, then maybe 360 before 4, because again, it's just had bad earnings. So this is one that should run into resistance more than others, more than, for example, Mag Silver that just had good earnings. You know, this one will probably run more than Fortuna at this point. So Fortuna is not, I don't expect it to be a very, very strong one on the way up. And so resistance here is first one. Next one, if we even get there, of course, 370, 360, 370, and then, you know, maybe 389. On the way down, this one here to 259, probably 261. Make sure you get it. And then if it keeps going lower, then 210. But that's, I don't think it's going to get there. EXK, I don't think this has had earnings yet. You know, beautiful, beautiful chart. The kind of one you'd like to buy. It's come down a lot. It's had a nice move up, nice move down. Look, it's starting to have support just above this little mini resistance. So it's like a big move up, retrace the whole move, but not too much so that it becomes bearish. And to be honest, it should start to move up. Next resistance, just looking at it now, probably around here. You know, this little candle here looks like these candles here. So 330, I think I remember seeing it struggle around there a few times now that I see that number. But then again, I could be confused with CD and Fortuna actually. 330 after that, 360, yeah, maybe just a bit, yeah, 360-ish. And after that, a bit like Fortuna, 389, right? Look at this, Fortuna, 389 struggling over there. EXK, I do get confused. Now I see why. So these little mini levels on the way up, I don't need to go higher than that because we've got a massive thing going on. If we do start to take out 390, you know, something's going on macro-wise. On the way down, the last low, maybe this is encountered if gold flushes 1900, whether it's a real or a fake flush. So 280, 281 should be a little mini buy zone. If we go lower than that, God forbid, 250, let's zoom out. Yeah, there we're talking about absolute lows for a long time. But, you know, depends what your thesis is. If long-term you're bullish and you have, if you're not in options, you're not on margin, and you don't need the money, then just buy, hold, walk away, and add more later. And, you know, in 2 years from now, you should be all the way in the 100% higher from where you are now. So those are levels on the way up and on the way down. First Majestic, this is nice, right? This also looks like a miner that is part of a sector that's already bounced, but we know that it hasn't really bounced yet. So this is nice. You know, let's just zoom out. Look at this long-term support. My goodness, beautiful, nice bounce, hit resistance. I nailed this sell. And it wasn't easy because this level here is not obvious. I was pretty proud about that one. Obviously, $7 is easy to call, but I think I sold at 680, probably 89 or something. Just happy I did that because I bought back. Look at this mini gap here. I mean, look at this reversal here, strong candle. And look at this. This is the best one so far. Closed at high of day. Nice big move. Perfect candle. Open at low of day, close at high of day. Done. Message sent. Next is 684. Look at that mini resistance. I'll make it a short line because I want to make sure I know it's not some major. So could encounter this little, you know, 679 little sell. That's what I would do. A little, you know, 5% out, 679. If it keeps going another 5 or 10% out, and then you've done that move, sell whatever you've bought back here, and then you don't care if it goes back down, you buy back. But yeah, 679 all the way to 709 probably. Yeah, that's probably immediate resistance. And then look, if we do go higher, again, something's probably happening more, you know, beyond First Majestic. Something's happening to the GDX and maybe in the dollar and whatever yields and markets. But at that point, we would encounter this monstrously long-term descending. So if we do break out of 7, we hit this. However, we would probably start taking it out. You know, what would happen is, in my opinion, you know, a little resistance here, maybe a little there, and it would take a couple of days. We'd probably hit our head on this, come back down straight away, but then retest and break out. And if you start to close above this breakout, You know, this is a serious company. This is First Majestic. This is, what's his name? Keith Neumeyer. This is not some Chinese trash. So this could actually have a squeeze to 9, 10, you know, after 5 or 6 weeks. Obviously, it needs the sector to help it out. But this one, in the back of my mind, I know that I shouldn't be selling too much in the short term because this could really move. And then, you know, selling a little 100 shares here and there, you could regret because it could be worth double very quickly. So First Majestic, I got my eye on you. And I'm definitely not willing to sell too much if we get here. Really, yeah. So I like that, like First Majestic. All right, CDE, possibly my favorite one on the way up, but on the way down, look at this. You know, this long-term horizontal I was watching for a while, and we flushed it. We flushed it on bad earnings. I think it was bad earnings. Obviously, we're going to flush it, but look at this reversal. That was nice, up 9% on Friday. But we're just back at resistance, price support. So we should go back down. If, you know, gold just drifts lower, the dollar goes up, the usual stuff we've seen the last week, even though the miners are sort of green, I think we should encounter resistance here. So we may have CDE down 2 or 3%. But if the sector really moves, you know, despite what I said about Fortuna, this one has been so trashed that it could easily go above, you know, its earnings breakdown level, which is not too far away anyway. This is the type of stock to move a lot. If silver, gold, silver start to go up, the miners start to go up, you know, this one will move. And that's what I love about it. And that's why I nibbled a little bit, not just because of that, but look, long term, this ascending I've got here. This is from the Corona. No, this is from 16, Jesus. This is from the 16 absolute low. I think gold was 1050 back then. Straight through the Corona low. It was a higher low, but just about. And I think it's pretty accurate, this. And basically we touched it, right? I think it's 260, it's probably 230, whatever. It went to 233. What's the difference between 233, 234 and 224? Zero. No difference. What is it? 3, 4, 5%? That's the same as zero when it's these numbers. So I nibbled this. I didn't sell, even though it should be at resistance. I'm in this one for a bit of a bigger move. Now, obviously, we can go all the way back down. If we do flush this long-term ascending, then okay, it'll be the horizontal low of, it'll be the low of the Corona days, which is $2. I should probably zoom to check that out, but basically $2. And if we go even lower than that to the 2016 low, then it's 160, whatever it is. I don't care. I don't care. I'll check that if that happens. But for now, I'm watching this one closely. I just need the sector to turn. If it does, this one will move. And the immediate resistance, I mean, obviously we're at one now, you know, to what is it, 265, 270, this kind of zone. After that, not too obvious, probably 330 definitely. Let me move that up. 330. It could just run into resistance before then because that's a lot of candles, but I'd probably be looking more at the GDX GDXJ levels to understand where CDE may run into resistance if we do start to move higher. So I'd be watching gold, silver, and the miners for that. This one is a beast. You will remember this one in the future, either because it goes very bad or very, very well. But this is the type of stock you can retire on. Discovery. This one was under, this is now an irrelevant descending. Is there another descending there somewhere? You know, this one, no. Okay, this one has underperformed for a while, but it's starting to put in its bottom. You know, look at this, it makes sense why it was here. We've got this horizontal one also. Look where this stretches out from. It was the high from back here. So resistance around 50 cents. We broke it and went all the way up to $2. Beautiful. And now we've very slowly consolidated all the way back down to 50 cents, where we hit support here. And then a little mini higher low, basically a double bottom over here. And now if the sector jumps, if silver starts to move up, this one should move up. And for me, okay, 65 cents maybe, but really 70 cents is the first real resistance. Let's just stretch this out a bit more. And if we start to, obviously we'll hit that, come back down and then retest. Before we hit 77 cents resistance, we're probably going to run into this descending, which if I zoom out, is very credible, very long term. And if we start to take that out, honestly, $1. So imagine where we are now, 50, 60 cents, not even, and I'm talking $1. That'll take time, that'll need the sector, but this is a decent company too. Otherwise, I don't think I'd hold it. Well, I have one or two companies that are not that good, but I'm trying to get rid of those, I think. I'll get through that later. But for me, 70 cents, definite resistance expected, unless the sector's just exploding, gold 2000, blah, blah, blah. After that, 77 cents, but it depends how long it takes because you may hit the descending. But the point is, once we close above the descending, I do expect a crazy run. This is the kind of stock that has a crazy run. And to be honest, a run to $1, let's zoom out. That's not exactly demanding too much. I mean, this thing was at 2 when gold was below 2000. So this one can really run a bit like CDE. But for now, you know, it's bottomed. It's not at its lowest peak. So I think it can follow GDX on the way up. But again, it depends on the sector. But on the way down, after 50 cents, honestly, I haven't really looked at it. Let me look at it now. 30 cents, maybe 40 cents. Yeah, 10-cent increments. I'll just consider 10-cent increments. I'll look at it if we close below 50 cents. So let's first close below 50 cents before we worry. But by default, and just from that quick view, I think 10-cent increments. Okay, now I'm looking at the more trashy stocks. So if you want to finish watching, then fine. US Gold Corp, very little holding. For me, resistance is actually just below 450, even though it tends to pop its head above it. So 449, I hold very small amount. I've done good trading this, so I don't really care what happens. But I think if we move up 450, if we go higher, 480, after that, then you see the horizontals, 520, not even $5, 520. And then this is the lottery thing. You sell somewhere in this gap. On the way down, probably 380. I haven't put it in because I don't intend to buy anymore because I have very little and don't care. After 380, then probably 360. I'll end it there because I don't care. Gold Core, these two, Gold Core and K92, are decent stocks compared to the one just above and the others below. But I just bought very little amounts. They were sort of late rally lottery buys for me. So, but I'm considering putting all of the money I have in these mini juniors into GoGold and K92 because they're better stocks. Anyway, let's just look at them technically. So GoGold, I think it had good news, or maybe I'm getting confused with B2 Gold. They remind me, the names sound similar. Support is $1, nice number. Also support from all the way back here, makes sense. We bounced on it, so that was correct. On the way up, probably 120. After that, 130. I don't expect us to go higher than that. It doesn't look very much, but that's 30% move. If we go higher, then I've got 145, and then you've got this descending. And like many other precious metal companies, you have a lot of descending, a lot of companies with descending long-term trend lines to break out of. So that's on the way up. On the way down, not obvious. Maybe 90 cents. Look at this little consolidation here. Maybe 90 cents. Otherwise, straight back down to 70, where it should be very strong buying. I'm just going to add this because it's certainly not impossible, especially if gold starts to flush gold starts to flush 1900. And like I said, this one I don't mind adding to because it's a good company and I own very little. Okay, K92, similar kind of one. Look, we're at this long-term horizontal where it's bounced. Although look at this, I don't even know what the news was. That's because I don't own enough. But yeah, it's holding on the way up. Well, at this point, probably 620 is resistance because of this candle. But if there's a big rally, then this old 650, 660. If we go higher than that, I've got $7. Nice round number. And at that point, the next resistance would be the descending. So I'll stop there because that should take a lot to close above that. And then after that, we should squeeze to 8 or 820. On the way down, what do I see? Maybe this $5 round number, small resistance there. Go on, because I don't own enough of this and I find it a decent stock. I'll add that in because I'll probably want to buy that. Okay, Reyna, one of the companies I don't own too much. I used to own a lot, but I traded out decently, still own a little bit. Now it's worth a lot less. Don't care. I added money elsewhere. But look at this descending. This descending, it's got to count, right? We just need to close above this horizontal. Then, even if the descending doesn't count, the horizontal is hard to ignore. So 15, you want that close above 15, and we should run to 17. Doesn't sound like much, but that should be a decent percentage move. After that, 20. You know, I remember this move up here. I sold into it and thought, do we go all the way back down? Never underestimate how much lower miners can go. Always take your profit. But this one, you can see what I'm looking for. I'm looking for that breakout of this descending. And I don't know if I'm going to put a sell here because I think we may have a little mini squeeze. So I'm looking for that close above 15 to move us to 17 and higher. On the way down, don't know. Don't have any support. Don't care. Willing to lose it all. I think I got $1,000 in this. So compared to the others, it's really nothing. But still, you know, $1,000 here, $1,000 there, $1,000 there. I could add all that 4 or 5 grand into some decent one, and that's, you know, much better money management. But it is what it is. So that's how much I own in that, and those are the levels I'm watching. Turmalina, possibly the worst. No, it's not. It's the next one that's the worst. This one, I mean, had big, you know, good news. I forgot the news it had, but it's, as far as I'm concerned, a good deposit, good jurisdiction, good management. I don't know, from the very little I know. I mean, I don't even know enough about these seniors and well-known medium tier ones. So these juniors, forget about it. You know, there are other people to follow if you really want to get to know these juniors a lot better. These are just ones that I believed in a few months, maybe even years ago, that I still own. Most of them, though, I got rid of and put the proceeds into more senior stocks. But technically, this one looks to be at support. Resistance, hard to tell with these illiquid stocks and poor candles. I guess the last high, 28.4. I don't believe that. That's probably a fake fill over there. So I'll probably go with 20 cents. So probably a mini sell at 19 cents. Now we're at 15. So from 15 to 19, that's a good move. So what is that, 30% or 25%? Probably 30%, 33% move. So I'd probably nibble a little bit out there. And if we go higher, this 27, I think I've got to sell in at just under 26, like 25.89, in case this whole move here is some fake fluff. Because if you start to break this horizontal, then you may be playing around with a breach of the descending, and then we could squeeze. So I think good news, you could squeeze. So I think I have a mini sell in, and if I don't, I should. And definitely a little sell here in case we fail here, because we did last time and we're coming from a lower price. But I think I always keep a little bit in case this does happen, because then it's a sell at 46 cents completely. I don't care how good the news is. That's a 100, 200, 300% move all out there. And then, as always, the juniors will come all the way back down. I don't care what the news was. So on the way down, no support, 100% loss. Renegade used to be called Trillion. Oh my God, that's horrible. I saw that on my screen. I just didn't know it was a new all-time low. Okay, support, no idea. Resistance, probably 59 cents. Because it was there, and also because we're hitting this new descending line. There's a new one, is there? If we break out of this 59, I don't know with these illiquid stocks if it even counts, but maybe we squeeze. Where do we squeeze to? 90 cents? Don't know. Not going to waste your time. Next stock, Silver Tiger. Okay, this one is another one I just chased, and it's back here or something. I chased it. You know, this is when gold was looking like we're going to go to 2100. So all these stocks from, well, it was Silver Tiger, it was K92, GoGold, and USAU. Is these the other juniors I've held for a while? They're all mixed up a bit, but this one I also bought as a chaser. And to be honest, I'm not that much underwater because I bought it late, and I think I added down here, so my average is probably 18 cents. And to be honest, look how it's looking now. It's bottoming just above its old low here. That's a decent candle if you can trust it. These little juniors with their little penny cents and fake illiquid candles, sometimes you can't take it too seriously. And the spread, you know, if someone buys one share all the way up here, the candle looks bullish. that's also another reason why I don't like these juniors anymore. So anyway, resistance, the descending. If we actually, I can see this horizontal too, just in case we break out the descending, just to know where we might hit resistance and fall back below into the descending, because the close is important. So the descending, this horizontal at 18 cents. If we go higher, yeah, roughly, okay, 20 cents is a nice round number. This is not very accurate. Oh, if I'm there, I'm probably out in the green if I'm averaging between these two cells. But you know, this is supposed to be a good stock. I didn't just buy random trash. I think it's one of the decent silver plays. So if we have a decent move up, we could squeeze a bit, and you know, 25 cents is not asking too much. On the way down, old support, let's say 14 cents ish is support, or maybe even this low down here, 13. Let's say between 13 and 15 cents should be support, kind of where we are. After that, is that a real gap? No, we're there already. Look at that. It's the low from there. You know what? Screw this. Let's just do this. Just so I know it emanates from a time span further out. After that, that's a massive drop. We're probably going to hang around the 10 cents. It's a nice area. I mean, it's a nice number, but also this candle, and you know what I mean? Just there. Maybe I'm just seeing something that isn't there. You know what? Doesn't matter. Keep it simple. Anyway, that'll do. Sorry for the long duration. I want to eliminate some of these more trashy names. I think you know which one. You know, from USAU all the way down to Tiger, these sort of 7 or 8 stocks. I like K92. I like GoGold. And USAU is okay to trade, but silver, I don't know. But I prefer all that money be elsewhere, be into these boys, the more senior and medium tier ones, the ones that do follow the GDX, the ones that I do know, the ones that are not running into money problems. You know, why not just throw it into Agnico-Eagle? At least you're getting good dividends, or Newmont, which is pretty destroyed too, right? So, or maybe just the GoGold and K92. It's a conversation I need to have with myself, but that's the wrap for my miners. I hope you enjoy that, and sorry for the length. Let me know if you want me to follow some other miners. I keep saying that, but I hope I haven't missed anyone's comments on that. Anyway, otherwise, have a very good weekend.